Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Friday, July 21st, 2023. Before we jump into the charts for today, just want to encourage you to please click like if you haven't already. Please share the content with friends and colleagues and become a Wicked Stocks YouTube subscriber. You'll be notified each and every time new content has been uploaded. Also, check out wickedstocks.com where we offer a full suite of both daily and weekly analytical videos just like this. Daily analysis in the Triple Q and the SPY, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves on those underlying stocks. Check out wickedstocks.com. Now for the chart. Let's jump to the weekly chart. So, after having closed above this 287.17 longer term channel top by, yes, the required 1% margin for several days, we obviously fell right back below. This was a big sell-off. Needless to say, the gap lower. We're testing meaningful support as we speak. I'll get to that in a moment. But, this sort of underscores really the emphasis I often place, always place actually, on the necessity for a weekly settlement above these important points. Yes, daily settlements are tentative, actionable signals for more aggressive traders, but it really is for the more methodical trader. It is the wait and see approach to see how we settle out on any given Friday above these longer term formations. Fridays have finality and closure to them. So what this chart is saying right now is not so fast. 287.17, despite its violation, still remains an important price point to settle above at the end of a week for indicating longer term bullish continuation to that 414.49 all-time high. Until then, this market remains susceptible to falling back into the upper 180s, upper 190s area over the next several months. Now, in terms of a downside pivot point, I'm going to take you to this chart here. Let's see. This is it right here. This is the focus. 260.80. 260.80 is really the beginning down to 261.92. What is 261.92? It is nothing more than that long-term speed line that we also settled above the same week that we had, actually, we closed above the speed line 3 weeks ago, tested the channel top, closed above it on a daily basis, but not on a weekly basis at all yet. And now we're falling back to the 2/3 speed line, which we did close above 3 weeks ago. It is also respectable support. But in terms of, and I'm really showing it to you for those of you who want to enter a long position here, I think there's a case to be made for it. I think you need to maintain pretty aggressive risk management to the downside, though, of course. But really, from 269.92 down to 260.80 today, a little over a 1-point range can contain selling through next week. And from here, we can turn back up into the upper 280s again within a matter of, with this kind of volatility, possibly within 3 to 5 days. 288.17 is the daily version of that weekly channel top that we find here at 287.17. They're a point apart right now. We are not going to see them today, but we may see them by the end of next week, perhaps, so long as we continue holding above 260.80 with this kind of volatility. I'm going to jump to this chart here and show you for the day 277.31, able to contain session strength. 265.10 is just above present price levels. That is that pullback low that occurred about 2 weeks ago before the big 5-7 day rally to the highs that were put out earlier in the week. So 265.10 can contain intraday strength. I'm speaking to you aggressive day traders, by the way. Contains intraday strength, and below which we should test the 260.80 to 261.92 region. We are right there right now. This area can absorb selling through next week, and from here we can rally back, as I say, into the upper 280s again within a week, 2 at the very most. With present volatility, it could be a matter of 2 to 3 days. In fact, on that score, let's talk upside. Pushing or opening above 265.10 will indicate 277.31 intraday. This former channel bottom a 2-week channel bottom about able to contain session strength. From there, we could fall back into the low 260s again. In fact, I'm going to zoom in here and show this is the real chart to show you. It's 260.80 floor of support for the day and through next week. 277.31 ceiling of resistance for the day only. Although we could top out here and fall back Monday into the low 260s. It would be a settlement above 277.31 that would reverse short-term momentum. And when I'm talking short-term, I'm talking like the last 24 hours momentum, the 12 hours of trade, really. Closing above 277.31, we should, within a matter of 2 to 3 days, retest the 287.17 long-term channel top. Now, if we do happen to, let me go into the downside breaking, 260.80, and that is shown actually right here. Breaking 260.80, 253.87 is likely intraday, and that is that rising speed line off that early May low. We can bottom out there perhaps for the day. The question is whether we bounce off of 53.87 and then close the day above 260.80, and then that would still maintain an upper 280s likely objective as we move into next week. But if we close below, there's a couple scenarios here. We break 260.80, test 253.87, close back above 260.80. We're all good for next week, expecting 287.17. We break 260.80, test 253.87. But if we close below 260.80, I'm going with that sell signal as we move into August trade. And yes, I think under that scenario of closing below 260.80, it really is 235.53 that I think is likely over the next 3 to 5 days. And as I show in this chart here, and I have already, if we close today below 260.80, a good high through August trade, I would expect over the next 3 to 5 weeks or less, 197.75. So for those of you who may, and I'm just going to go back to this chart here because there's another couple minutes left in this. For those of you who may, as we've been testing this channel top, been buying, say, 190, 200, say 190, been mentioning the 190 puts that don't expire for at least several months as a viable purchase. Now, if you got shook out of those puts because of what happened earlier in the week when we actually closed above this formation on a daily basis, I can understand that. But if you're still long those puts, you really want to see the market settle today below the 260.80 level. And then you're just holding those puts for the duration into August trade the following 3 to 5 weeks. I'll also say that if you have no position whatsoever and you're into the 3 to 5 week swing trade, a settlement today below 260.80 would indicate 197.75 within 3 to 5 weeks. So, if we close today below 260.80, you may reach for those 200 out of the money puts that don't expire for at least a couple of months. That would be the downside play. That would be the expectation if we close below 260.80. Testing 260.80, if you're a near-term options trader, you might reach for 288, 290 out of the money calls that don't expire for at least a week, because that is kind of the two-sided framework that I see right now. I'll go back to this chart. 260.80 support rally back to this channel top here within 3 to 5 days of doing so. That's also the 3 to 5 day swing trader. Yeah, and so I will then finish really the whole idea with next week, maybe the week we shall see that we actually close the week above 287.17, rising next week by a 1% margin, then setting off a significant buy signal into later year. Until then, we may sell off into the 190s as shown earlier, and that actually becomes clearly indicated if we settle today below 260.80. And I'll just leave it at that for Friday's Tesla. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back Sunday afternoon with Monday's Tesla. You have a great weekend.